Hello, everyone. Welcome to this week's market summary for all things money. This week is the week ending August 1st, Friday, August 1st of 2025. This week, the market posted a loss, and the S&P actually posted a weekly decline as payrolls on Friday today, they missed expectations. The Standard & Poor's 500 index fell 2.4% this week as payrolls, they missed the forecast. The index ended Friday's session at 6,238.01 and is up still so far of 6.1% for the year. The S&P rose 2.2% in July, its third consecutive monthly gain. Non-farm payrolls today, they rose by 73,000 in July, according to the data that was released, and the unemployment rate increased to 4.2% in July, which was in line with what the market was expecting. If we go on and take a look at the S&P or the look at the charts here with the SPY. This mimics the SPX that we were just talking about, and this took kind of a gap down today regarding it's a little bit through the 10-day moving average and now is currently resting on the 30-day moving average. I see a potential move down even lower to at least probably the 610 area, and that's probably going to take place, I would think, probably next week. We're seeing a little downturn here on the momentum oscillator here, going a little bit more, it's not negative yet, but we're decreasing in our bars here. If we go on and take a look at some volume here, we also see that the volume is increasing quite substantially, and a lot of people are actually selling the market here and taking a profit. If we kind of go on and take a look at the TLT here, the TLT was kind of sending some mixed signals here because this is the bond market, and we have seen the bond market here go up, which when this goes up, it's kind of technically signaling that rates and whatever should be going down. So when we see this there's an inverse relationship here that kind of doesn't coincide with what happened with the Fed. The Fed decided to keep rates the same this week, and I think if Powell would just loosen and kind of reduce the rates at least some, now that the unemployment rate is not where it is showing strength anymore, we would see a little bit more positive upside to the market. But until then, we're kind of in limbo land, and right now some of the things that I've looked at doesn't signal even a rate cut for this year. The people are basically expecting the Fed to do absolutely nothing, which is not going to be very healthy for anybody, because that's costing America in general a lot to borrow money. If we go on to the Dow and we take a look at the Dow here, we see that the Dow has actually gone up. It touched kind of the top up here, or kind of touched the resistant levels in the 450 area here, and then it kind of just fell off and back down. This is actually looks like closed below the 30-day moving average. It's below the 30-day moving average, and we're resting right here at the 50-day moving average. So this move, if this breaks this part, prepare us to probably go down and test the 200-day moving average, most likely. If we can kind of hold here and kind of gain some steam, the tap box here to the upside is still calling for about the 450 area, so we could see some more potential upside, but we'll see what the market has in store for us next week. If we take a look at the VIX is kind of a little bit more elevated than what it has been. And it actually, if we kind of draw a trend line here, kind of, let's see, draw this trend line here. I want to draw it. Not sure why the functionality of the, oh, there we go. We kind of see right here that today we have broken out of this kind of trend line, and potentially this is signaling more upside in volatility, which mean the market is probably going to go a lot lower. So keep this in mind and kind of keep this in the back of your head that the volatility is increasing within the market. If we take a look at the QQQ, the more of the tech sector here, we see kind of a similar pattern here, and it's resting right here on the 30-day moving average. I venture to see that we could see probably a pullback down to the 540 area. So the market is wanting to roll over, and we kind of saw that with the bond market, the TLT here, that the markets are selling off and they're going into bonds because these are going up. And they also, if we kind of look at what the dollar was doing until today, money is going into the dollar as well. So there was a sell-off in the dollar today, and we'll see if this holds or not, but this resistance level, or this ceiling that was created here, was punctured, and now it's being tested again. So keep this in the back of your mind that the markets could be in for a correction phase. If we kind of look at the IWM here is showing a nice gap down, test of even the 200-day moving average, and it's still signaling upside potential into the 235 area-ish here, but this region actually has to hold to make that happen. If we go on to take a look at the metals, gold today, it kind of, excuse me, it is broken out of this triangle here to the downside. So I don't know if this would be probably a little bit better to reconstruct. Maybe this is more of kind of a descending or ascending triangle that's kind of forming. Maybe this is going up and testing the backside here. I don't know. Time is going to tell here which direction this goes, but this kind of a pattern, it usually, as an ascending triangle, usually breaks to the upside. I'm still very bullish on gold. So as long as this continues to hold, this pattern is just showing us a sideways pattern anyways. So as long as that keeps holding here, I do see potential upside within the next month, maybe a little bit longer, but hopefully not much. We go on to silver. Silver kind of took a nosedive here from where it was, kind of testing the backside of this AI region here that we had in June. And then the tap box here is also signaling a move higher to maybe the $40 area. So keep this in the back of your mind that people are moving more towards some safe haven investments, be it the bonds or selling out of the market. I don't think this is going to be. I think it's going to be a correction, not a complete meltdown. We kind of take a look at natural gas here. Natural gas has formed a wave 5 low. It's broken down, and if we can kind of hold here and stabilize, I do see this probably potentially going up here, relabeling and making a zigzag pattern to the upside. So we'll kind of continue to monitor that, but I don't think as long as this continues to hold, I think we'll probably see a low of maybe about the $12 area, but that's probably about as low as I see at this point. We'll wrap it up here. If you do have any questions, comments, or concerns, please feel free to leave those in the chat. We can answer those directly there, or we can include them in our weekly market summary next Friday. So please feel free to leave those comments, questions, and concerns below, and we will have a great trading week ahead. Just stay vigilant of the market's changes, and happy trading.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.